Recently, I built a $5,000 buffer in my funded account in 1 week. And in this video, I'm going to show you guys and walk you through exactly how I did it and also how you can apply this to your own funded accounts. If you want a breakdown, a structured breakdown of how I've actually done this, feel free to join the free Discord. I'm going to post a flowchart in the free Discord later on this week. But with that being said, guys, let's get straight into the video. So pretty much this trade here set the tone for the week and it really built that buffer nicely. So yes, it was high risk, but it paid off. And this is what trading is about. It's about risk on with A+ situations and risk off when the conditions are not favorable. Again, once I was up a few $1,000s, the pressure was kind of off here. So all the other scalps that I took were really small scalps, lower risk, and really they were just kind of inching the price a little bit closer towards my mental threshold that I wanted to use to actually be accepting a payout. Part 2 in this process is once the buffer has been built. And once the buffer is there, I switch gears completely. I'm scalping, I'm taking partials, I'm not trying to hold runners all the time. I'm just trying to slowly build up my buffer. 10 handle moves are great, 1-to-1s are great. And the mindset here shifts. It shifts from growing fast to actually defending my buffer. And that's a really important part. I'll take 1 to 5 trades a day, as you saw in the first screenshot at the start of the video, and that's it. And these are some trades that I'll take similar to this, right? Where I've got sweeps to sell side, we've got a macro, we've got an inversion fair value gap, very, very similar place. Even something like this, where price has a, inversion fair value gap, looking for price to invert that, taking shorts from here, looking for price to invert this, taking longs from there. And in this situation, I'm still waiting for good setups, but I'm just taking quicker hits. So, these situations here are great frameworks to actually take scalps. We use previous ranges, we use inversions, we use the macros, and it's as simple as that. Now, before you go any further, if you're looking for a free checklist, an A+ checklist to actually take you through what to look for in these great setups, I've got you covered. So this will be on my Discord, you'll find it here. Really good checklist. A lot of people are using this already, but with that being said, let's move forward. Here is something that you can really study and take forward from this video. Just a very typical framework that I like to trade. Yes, I like to trade macros, but these type of setups are really, really nice. So look on this day here during the Asian session, lots of opportunity here to go long. Every time we pull back, we can go long. But the question you might have is, well, why are you looking for longs? Well, the best way to put it, if price has been stepping down for quite some time, and if price is sitting inside of a higher time frame fair value gap, then I'm going to be looking for longs. It's as simple as that. We've got price here. You can see we've got a nice impulsive leg up. We start to, trade down here. Go back down to say a 5-minute chart and have a look at what price is holding. So this is what I look for. Whether it's a scalp, whether it's an A+ setup, I'm still looking for price to deliver from a higher time frame gap. And any long position, whether it's from here, here, or here, in my opinion is A+. Each of these deserve a partial. Each of these deserve an opportunity to run. Do some of them run? No. Do some of them run after? Yes. So it's about taking chances in the market. And if you take this trade, maybe it's a little scalp. If you take this trade, maybe it's a runner. If you take this trade, maybe it's a runner. But it's about putting the probabilities together and still putting yourself in the highest probability position. But in this case, you're just scalping. You're just building the buffer. You've made your money. You've built your threshold. You're happy with it. But now you're just seeing if your edge can play out a little bit more, but you're protecting your capital. Please keep that in mind. Crucial. We had discussed 2 phases already. The first one is building the buffer, and the second phase is obviously stacking up the profits, just small scalps. The third one's probably the trickiest because a lot of people can make money, but they cannot keep it. And this phase I call the psychological profit cap. It's where you've really got to balance multiple emotions. You're balancing fear, you're balancing greed. It's easy to make money in trading, it's easy to lose money in trading, but the hard part about trading is keeping that money and capital preservation. So when do I stop building a buffer? I set myself what I call a psychological profit cap. And this is like a level or a zone where I'm happy to, cruise, just sit on my money and wait until payout. This is where though you've got to balance 2 things. You've got to balance greed, number 1, also over trading risk. And it requires a big, big amount of discipline. But how do you develop that discipline in time? You develop discipline from a few things, right? Number 1, you experience time and time again making mistakes and you learn from those. But number 2, you understand that your edge will play out and you'll be rewarded by following your rules. And when you see yourself do that multiple times, you're more likely to follow your system. So the minimum payout for the expert account with My Funded Futures is $1,000. So I need to make that. Anything extra is a mental profit zone. For me, $2,000, $3,000, $4,000 per payout request for 14 days is fine. That's beautiful. If I hit that, I'm happy to stop trading for the cycle. Now, to tie all of this together, let's actually go through this flow chart. And again, if you want this, I'm going to post this in my free Discord. The link to that is in the description below. But ultimately, this is my buffer plan or my risk management plan. What do I do? It doesn't matter if it's an expert account, a starter account, a Topstep account, an Apex account. I follow pretty much the same process every time. Having a look just here you can see there's multiple phases, right? Phase 1 we've discussed already, which is the buffer building phase. Now, in the buffer building phase, you've got two options. Option number 1, you take a slow and steady approach. If there's an A+ setup, I'll take a trade with 3 contracts and I'll try and hold that to build a buffer. Number 1. Phase number 2 is capital preservation or capital expansion. So realistically here, the buffer is in place, right? The buffer's in place. We know that exists. What I'm looking for price to do now, and what I'm looking with price, is just to slowly build that buffer with base hits. All I'm doing is scalping, roughly 1 to 5 trades a day. I'm looking for quick, high conviction plays, and I'm staying above what I call a payout threshold. Phase number 3 is stopping trading. Stopping trading, I've reached that psychological profit cap. I've got my target. I don't need to trade anymore. All I need to do is to satisfy the conditions. So for example, Topstep or My Funded Futures could be 5 winning days of a certain amount. The expert accounts in My Funded Futures, every 14 days you can take a payout and you need to trade once every 7 days. If I've satisfied that, I'm good, right? All I'm trying to do is satisfy those rules. And phase number 4 is capital preservation era or capital preservation phase. This is where greed kicks in. And I ask myself, is it really worth it? Like, you got to ask yourself these questions. I say, Ruben, is it really worth, Ruben, trying to make an extra $1,000, an extra $2,000 when you could go on tilt and then lose everything that you've made? All the hard work that you've done, is it worth losing that just to make a little bit more money? And the answer from experience, trial, error, and a lot of failure in the past is no. And that is where, if I want to trade, I'll trade on a separate account. So on the screen here, you can see this is a separate account and I'm taking base hits on that account. Yesterday, 1 and done during the Asian session, 1 mini contract, 1 and done, we're good to go. So if you want this, spreadsheet, if you want this flowchart, comment down below flowchart, join my free Discord. The link to that is in the description below. But this is the process, guys. And a bit of real talk to end this video too, if you're still here, let me know in the comments below. But ultimately, trading is a you versus you game. Don't worry about what other people are doing. Stick to a process. This process may not suit you, but a lot of people ask me, what do I do and how do I build buffers? What do I do once I've built a buffer? These are the techniques and these strategies that I use to keep my money, to grow my buffer, to get payouts, to stay level-headed, because everyone has emotions, including myself. I'm not perfect. A lot of people think once you become profitable, once you get payouts, that any kind of ego, any kind of emotional, issue goes away. It's not the case. What happens as time goes on, you get better at managing those things. You manage FOMO better. You manage greed better. You manage fear better. And these are the ways that I've personally done it. With that being said, guys, if you like this video, feel free to leave a comment below, leave a like on this video. And until next time, we'll talk very soon. All the best. Have a great week.